Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest news of the stock market, starting from the benchmark indices, flowing into the sectors and stock-specific buzzing action that you're looking at. Of course, the markets have cheered the RBI's monetary policy. The Sensex is up about 320 odd points and also 112 points of a gain is what you can see on the Nifty 50 pack. Expectedly, the RBI has moved the needle on the rate hike yet again, the sixth time in a row. And we have seen 25 basis points of a repo rate hike, or the key lending rate that has moved up in today's policy review. Also, their stance has been maintained at withdrawal of accommodation, slight tweaks coming in on the growth front and the inflation front, with inflation inching downwards and the projections for the growth also inching upwards as well. Let's quickly look at how the markets are trading, and we'll also take an expert view as to how do we see from the market standpoint how is the D Street really deciphering all the announcements made by the RBI, and if there is anything that changes for you as an investor as to how do you really approach the markets post the policy now. Looking at the markets right now, like I pointed out, 0.6% of a move on the Sensex and the Nifty right there, 17,831 for the Nifty and 60,596 currently for the Sensex, 311 points up. Of course, we did see 450 points of a jump in the intraday basis, the slight cool off from there, but you can actually clearly see the participation inching higher from the broader market space. The mid-cap 100 and the small-cap 100 indices both have moved up higher by half odd percent. The Nifty Bank has turned flat, with the key components talk about the financial services. That's still holding up about 0.3% odd, but it's the PSU banks that have actually slipped into the red. So therefore, the pressure on the main index. Private index about flattish at this point in time with a positive bias. What's also not doing well today are the other rate sensitive packs. The auto space, that's down by 0.4%, and the Realty pack, although it's cooled off from the morning lows, but you can still see a decline of 0.2% odd on this index as well. The FMCG factor, another consumption-oriented sector, that's down partially by just 0.1%. What's doing well in today's market is in fact the IT sector, that's up by 1.7%. Metals pack shining brightest today, 2.3% odd, and pharma seeing some kind of gains coming in tow as well. In terms of the market breadth, it is clearly skewed towards the advances, 35 gains to 15 declines when you talk about the Nifty 50 stocks. In terms of the gains, you are seeing second consecutive day when two Adani stocks are actually as part of the top 5 gainers on the Nifty index. Adani Enterprises up by about 11 odd percent. Adani Ports also up by 6.5% today. Apart from this, you're also seeing SBI Life, HDFC Life, the life insurance majors really contributing to the gains today. Bajaj Finance inching up higher as well. JSW Steel and Ultratech Cement, some of those metals and the construction majors that are participating in the gains in the rally today. What's not doing well? Some of the auto names. In fact, if you talk about the two-wheeler majors, Hero Moto, Bajaj Auto, Eicher Motor, all three of them down in trade today. Bharti Airtel and Cipla, the other laggards at this point in time. But time now to welcome our guest for the day. Kranthi Bathini joins in from WealthMills Securities, is the Director of Equity Research. Welcome, Kranthi, and thank you so much for taking the time out for this discussion. Well, first up, your thoughts on how did you read through the statements made by the RBI governor today? 25 bips, is that what you also expected? And how is the market really reading into the fine print of the RBI policy statement?
Actually, as expected, we are at 25 basis points hike. This has been discounted by the market. That's the reason market turned into positive territory once the news came out from the RBI governor. The MPC is confident that the growth momentum can maintain over a period of time, and the growth prospects also seems to be in line with the market expectation. But we need to see how the earnings that are going to pan out in the next coming quarters. This is the crucial thing, because the monetary alignment is coming and it's stabilizing. Even from the US markets also, we can see some kind of stability in terms of their policy making decisions. So in line with that, India also maintained 0.25% as the interest rate hike. But next, going ahead, how the kind of policy making from the MPC is crucial for the markets going ahead, because all these days we have been giving a reason of inflation for the interest rate hikes. But going ahead, how the MPC decisions, they are going to be extremely crucial for the further run up in the markets going ahead. One thing is, we need to see how the future rate hikes that are going to come. This is the MPC is going to maintain the status quo going ahead, because we can see some kind of cool off in the inflation also. The same thing, whether the same thing get replicated in the same thing can be coming from US Federal Reserve also. These are the crucial things we need to wait and watch. Overall, market turned into a positive territory, and the dust seems to be slowly settling down with respect to Adani Group issues and stock concerns also. So we need to expect a positive kind of momentum from the markets going ahead.
Sure. But the rate sensitives, especially the auto pack and the realty pack, they are trading subdued today. Slight weakness is being seen on both these indices as well. Is that the aftermath of the rate hike, and perhaps no clarity on a pause coming immediately soon enough? And some of the analysts and economists do believe that the RBI has perhaps left the door open for some more hikes, or at least one more hike to be coming in the offing, which was earlier not expected. Most of the economists were penciling in a pause right after today or from today as well, but that isn't happening. And indications coming in from the FOMC last night as well. How should one really be approaching this auto pack and the realty pack?
Sakshi, you raised a very crucial question. Okay, they kept the door open till for the future rate hikes, or if they maintain status quo. So, given the kind of geopolitical environment right now, none of the MPC can say if you that this is the last hike rate that we are giving. Nobody will give. The same thing is happening with respect to the Federal Reserve also. 1 week, whenever Jerome Powell comes onto the media and whenever he address any gathering, if you see the statements that comes is completely divergent. 1 week or one fortnight, they say the inflation is cooling off and it's transitory. They use these words, but the next week again they will come back and say, no, we are in a growth territory. Inflation is cooling, is not cooling. So this dichotomy will be there going ahead for some more time, until unless we'll get a clear evidence, because the growth is very strong. One thing we need to acknowledge is what does the underlying fact is the economies are at a pretty much strong note they are going. That means the company earnings also will be on a stronger note. So this is the reason whenever there is a slide down in the growth, RBI will take a decision, or monetary policy committees will take a decision. Ultimately, that will be a positive news for the equity markets are concerned. So one need to be with that faith only in the markets, rather than trying to exploit the data immediately right now.
Right.
Extrapolate the data right now.
Absolutely. Mr. Bathini, there was a large expectation that the RBI governor would actually want to calm the nerves in the markets by talking more about Adani Group and the exposure that the Indian banking system has to the group, and what happens to that, and if there is any concern on the exposure right there. But the RBI governor clearly said that they have issued a press release and there is nothing more to add. He did mention that the sector remains resilient and strong, and they did not discuss the Adani issue at the MPC meeting as well. What does this really indicate? That, should the markets decipher that it is not as large an issue that the markets have been worried about so far? And, looking at the kind of buoyancy that we are seeing for the second day in a row on some of the stocks right there for Adani Enterprises and Adani Ports as well today, should one really look at, a recovery from this knee-jerk move that we have seen in the last week?
Sakshi, we need to interpret this data in two different angles. One is the political angle. We are not here to discuss anything about the political angle, but market will not ignore the political angle also. Market will take into cognizance of the political side also what's happening. So as a analyst or a investor, so one need to cognizance about what is the political angle in this, and also what is the market angle in this. Coming to the market angle in this, as the news has been coming from all the sources, the regulators and everyone, their cognizance, they have the cognizance about the issue, and the news that has coming from different regulators and also the banking, like State Bank of India and the lenders of Adani Group, they are quite confident about the exposure with respect to Adani Group. And this issue get addressed over a period of time. So we need to wait and watch how the things, because right now the regulators and the government agencies, everyone are quite confident about their exposure, and it's fully covered.
Okay.
Now, going ahead, it is something related to the Adani's earnings that are going to come in the coming days, and their business expansion plan that drives the future course of action and the prices of Adani shares going ahead. That's what currently we can take a decision with respect to Adani stocks are concerned.
Okay. Also, let's focus a little bit more on the other pack that's actually quite resilient, in fact, showing a lot of buoyancy in the markets today, the IT pack and the metals pack. Your views currently on the IT space? I remember discussing this space very, very extensively with you when this whole sector was under the weather throughout 2022 and in the beginning of January, 2023 as well. But there have been some incremental signs of improvement coming about right there. Most of the experts that I had been discussing were still saying that it may take a little while. Perhaps in the second half there will be a rebound. But is it coming slightly earlier than expected? And should one really look at considerably increasing their positions in the IT space?
It all depends upon the risk appetite, Sakshi, for an investor to get into IT now. But I advocate the investors to enter in a staggered manner, because still US economy is going at a strong note, but there are kind of a recessionary worries and all the geopolitical issues that are panning out around the global cues. But for an investor, they can definitely I can say it's the right time to enter into IT stocks in a staggered manner.
Sure. Sure. And what about the metals pack? What's leading to this buoyancy in the metals pack? And is that time enough for now, again, once more, to look at the metals pack as a potential buying opportunity in some of the stocks?
I still will be in a wait and watch mode with respect to metal stocks are concerned, Sakshi, because this is right now, since the market is up today, metals also some kind of positivity they are showing. But to make any kind of serious investment decision in metal, I'll just wait for one more quarter results for metal, because the global dust has to settle down. Whenever the inflationary worries are high, and any kind of global recession kind of worries that props up metal have a very negative impact on the stocks. So they are cyclical in nature, and the valuations looks fair at this point of time. But to take any kind of strong investment decision, I'll wait for some more time in the metals to take any strong decisions.
Okay, understood that. Well, thank you so much, Mr. Bathini, for being with us on the show and discussing with us these several pockets, and especially after the RBI policy, the way the investors should be looking at approaching their investments right now. Let's quickly look at the markets currently before we wind down the show as well once again. Again, a 0.7% move on the Nifty, so it's inching towards the high point of the day, 17,843, 120 points of a jump for that one. The Sensex hovering 345 points higher at 60,633. About 0.6% up tick is what you can spot right there. For the broader indices, the small caps up by 0.7% odd, and the mid caps also inching higher by 0.6%. So it's increasing participation coming in from the broader market space that's leading to an overall rise in the markets. Nifty Bank flattish with a positive bias. The PSU banks are inching higher into the green back again, with the private banks and financial services already into the green. But what's really looking at a dropping right now is after the policy, some of the rate sensitive sectors like auto and realty pack that are still down in trade as well. We'll continue to keep our focus on how the policy moves and the announcements have come in to impact the various pockets of the markets, and how do they really impact your own wallet and your decision making when it comes to your loans and your EMIs as well through the day. And also, we'll keep an eye out on how the Adani group of stocks are continuously moving. We'll keep taking all the expert views on that as well. Until that time, you should stay tuned on to Business Today TV. Don't forget to subscribe to this channel and stick with us via our other social media platforms as well. That's Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in for now.
when it comes to